Welcome to Kansas City Real Talk, brought to you by KCRAR. I'm your host, Alex Gehring. Guys, we're talking about FinCEN today, and this time it's really happening. It's different than what we talked about 12 months ago with everybody in real estate and every other industry needing to record their LLCs with the federal government. That is not what we're talking about. We're talking about financial crimes and money laundering in the real estate space. Starting on December 1st, 2025, certain professionals involved in real estate closings and settlements must submit reports to FinCEN regarding certain non-finance transfers of residential real estate to legal entities or trusts. Guys, if that sounds confusing and unclear to you, that's because it came from the federal government, okay? So we've got experts in today to talk to us. It's Nichole Banks with Tallgrass Title and Elizabeth Daniel with Continental Title. They're going to tell us exactly what this means and how it's going to affect real estate agents. I'm so excited for this episode. I hope that we get some clarity on what we're about to experience. Let's go get Nichole and Elizabeth. Welcome back to Kansas City Real Talk, brought to you by KCRAR. I'm your host, Alex Gehring, and I am here with Nichole Banks with Tallgrass Title and Elizabeth Daniel with Continental Title, and we're going to talk about everybody's favorite and most sexy topic, FinCEN. Right? Yep. Everybody wants to talk about FinCEN, and I know that you guys have been talking a lot about it. You've been teaching a class and all of this, and we'll get into that. But before we get into all of that, I want to know a little bit about both of you. Nichole, we'll start with you. Okay. Nichole, you're on our YPN committee, yes?
Yes, and events committee.
And events committee.
Yeah.
Great, awesome.
Yes.
Talk to us about yourself. What got you started in title?
Oh, man. 20 years ago, I needed a job. And there was a company that needed a policy person, so I got in, and now I'm stuck.
It's like the title mafia.
It is. You don't get out.
They keep you.
Is that how that works?
Uh-huh. Mm-hmm. Yep.
So talk to me a little bit about your association involvement. So what got you started with YPN and with the events committee?
I had a marketer that used to work for us, and she went a different path, and we needed somebody to step in. So I was like, well, I guess I'll do it. And now here I am.
Awesome.
Yeah.
Very good.
Yeah. That's fun.
So what about you, Elizabeth?
I'm going to date myself, but I've been doing this 29 years.
Okay.
I started out as a receptionist, and I did not know what I had applied for. I literally was like, I just need a job. I was out of college. I needed a job. And for at least a good week, I thought I worked for the county.
Okay.
Because it was called County Title. Yeah. So, needless to say, I went home and told my husband, I don't think I work for the county. And he's like, oh, my God. So, I worked myself up from receptionist to a couple years ago, I became the president of Continental Title.
Oh, my gosh. I mean, that's you went from thinking that maybe you worked from the county to being really, really qualified to talk about financial crimes enforcement, right? I mean, that's a pretty significant journey there. I love it. Well, let's jump into it. So in the real estate industry, we've been talking about FinCEN now for 2 whole years, right? And I think that a lot of agents remember talking about it, especially about 12 months ago now, because when they heard FinCEN, they heard, I need to go into this government website and make sure that I register my LLC or my business entity with the federal government. And then all of a sudden, like I think it was like a week even before the deadline, they were like, oh, by the way, you don't have to do that anymore. And so this is a real thing. This is really happening. This is separate. Tell us about it. It's pretty broad, huh?
Yeah.
Yeah. So what even is FinCEN? Can we start with that? What is FinCEN?
It is the Financial Crimes Enforcement Network.
Okay.
Yeah, right? Sounds fancy.
Yes.
She made me notes.
Financial Crimes Enforcement Network. And so the goal then is to identify potential financial crimes that are happening within the United States.
Yeah.
And it's an arm of the federal government, yes?
Yes. It is looking for money laundering.
Okay.
So there was a study done from 2015 to 2020 that estimated that at least $2.3 billion of real estate was laundered through real estate. So it's a big deal. Like,
Yeah.
And what FinCEN's trying to do is stop the money laundering from terrorists, from drug trafficking, and from human trafficking. So as much as this is going to not be fun, I keep trying to look at the positive side of it, and that is who doesn't want to be a part of stopping bad guys from using real estate and our money for human trafficking, drug trafficking, and terrorism.
Absolutely. Can we stop for a second and talk about what that looks like? So I think we all know what money laundering is, but I don't think that that's something that we're dealing with on a day-to-day basis in most of our listeners' business, right? But if we were to see it, what would it look like? What does money laundering in our space look like?
So on a super small scale, not real estate, so just to make it real simple is like, let's just say we've been, got some bad money, some dirty money going on, right? So Nichole and I go to Costco, right? And we buy a bunch of stuff and we pay for it with our dirty money.
It's like the show Good Girls, if anybody ever watched that on
Yes.
Netflix.
Yes. Okay. And then we'll take it all back and we get the money back. Well, now it's clean money. So that we took dirty money and we washed it through Costco and we got our clean money back. So the same situation would apply to real estate. So let's just say we have an LLC with some drug money and we go buy a piece of property for cash in our LLC. And it's dirty money, but we pay it in through the real estate. We get a title to our house. And then we decide to sell it. That money just got cleaned and it got washed through the real estate.
Very interesting. So is it possible, as a realtor working in a transaction where that was happening, it's totally possible that you've worked with somebody that was doing this and you didn't have any idea.
Absolutely.
Right? Yeah.
For sure.
Yeah. And I think that's important for everybody to understand is sometimes things like this sound so frivolous because you're like, well, I've sold 60 houses this year and I've never heard of such a thing or ever seen anybody even talking about this. You wouldn't know if it was happening right under your nose. Is that right?
Correct.
Okay. So what is this new part of FinCEN going to do and how will that function to protect this from happening?
Okay, so let me give you a little bit of background first.
Okay.
FinCEN in 2016 created something called a geographical targeting order. They call it a GTO. It's a really cool CAR, not a really cool acronym. But what they found, so GTOs are current right now from 2016 to current. In 69 counties in the U.S., okay? What they have found from those GTOs is that 40% of the reporting information have created what they call a suspicious activity report on the person or entity, shall we say. And 7% of those are currently under an FBI investigation.
Whoa.
So
that's a huge number, though.
Huge for 69 counties. So that's where FinCEN came in and said, okay, we aren't going to just look at 69 counties anymore. We're going to do away with the GTOs and we're going to make everybody in the United States and every single county across the U.S. report because they had such a great return on 40% and 7%. Yeah. So it only made sense to them to take it across the U.S. So that's kind of the background. So how does it apply to us? So there's two major things that all realtors need to pay attention to. Cash transactions, and we'll explain cash because it's not like just cash. And if your buyer is an LLC, a trust, or a corporation. So not an individual, but an entity of some type.
I see.
Those are the two major things. So cash and an entity that are going to trigger what we call a FinCEN report.
Okay. And what does that FinCEN report look like and who files it?
Title companies are now responsible.
Isn't that great for you guys?
So wonderful.
Yeah.
Yeah, we're real excited about it.
So, and what kind of information are you taking down when you file this report?
So the current final rule, okay, that came out that is to start December 1, it's 111 different data points on the buyer. And I have not counted the ones on the seller. So the weird thing is if the buyer triggers FinCEN because they are paying a specific type of cash or they're an entity, the seller is automatically reportable. So it does not matter. Like if the buyer is reportable, now you've got the seller reportable.
Well, that does kind of tell me a little bit, right? And so it tells me how much work this really is for you guys. Yeah. It isn't just, I've got to file this report for one person, right? Because they happen to be an entity. If that buyer is an entity, now you've got to fill the whole thing out for the seller. And that could mean a lot of different things, right? Because then that seller who wasn't an entity and maybe didn't pay for it in cash all of a sudden, or maybe they did a long time ago, right? And maybe they were complicit in something at that point. Is it possible that we could identify people that maybe were engaging in a financial crime retroactively if you're having to file that report on that seller?
Possibly.
It's possible.
Yeah.
Yeah. I assume that has to be, they must just be trying to broaden the net, right, of how many people they're looking at.
Yeah, and they're also saying, okay, if there's like a certain seller that is repeatedly selling to somebody on the buy side that is already under investigation, then they're going to look at the seller and be like, do we need to pay attention to the seller? Why is the seller doing all this business with the bad guy? So yeah, they're definitely looking at everything. The thing that the GTOs did not have that FinCEN has as of December 1 is we like to say it has teeth.
Okay.
And when I tell you it has teeth, it means that Nichole and I are now, if we are the closer of the transaction, are civilly and criminally responsible to the cost of $100,000 per file, and then criminally 5 to 10 years in prison.
And you're responsible if it turns out that like something slips through the cracks?
So if we give the buyer and the seller their intake form, like I call it intake form, I don't know what else to call it.
That's pretty much what it is, yeah.
Yeah, and they fill out all their answers, or they fill it out and maybe they skip a couple of questions. And we see it, and we don't ask about it, and we don't make them complete it. They're going to say, you knew they were trying to hide something.
Wow.
So we're going to be pretty strict. So one of the things is, and I've talked to title companies across the U.S. I have not found one to say different at this point. Nichole and I are on the same page. If the buyer or seller chooses not to fill out the form for FinCEN, we will not close.
Wow.
Correct.
Wow. Which, that's got to be how it is, right?
Yeah.
Right. And all title companies, all closers are subject to this.
Yes.
And so it's not like we're going to find a title company that'll find a way to get around
I would sure
it.
hope not.
Yeah, that would be kind of contrary to what we all ought to be trying to do.
Right.
That said, I'm already hearing people talk about this like, well, if we want to avoid having to deal with all of this, why don't we get a $10,000 loan and then it's a finance transaction and who cares at that point? Can we talk a little bit about that?
I love that question.
Yeah.
So MBA, Mortgage Brokers or Bankers Association, has said that they're considering bringing back prepayment penalties for that specific purpose.
Oh, wow.
Yeah.
That's a lot of fun. Okay. Okay.
Don't know if it'll happen.
Okay.
But that is something they're kicking around because if you think about just the process of the loan origination, that's costly. They pay the loan officers a certain amount,
right.
And it's based on the longevity of the loan. So if it gets paid off in a week or even a month, then they can potentially lose money on that transaction. So
what about on a small bank? Because I think that most people aren't talking about like getting a 30-year fixed mortgage and then paying it off right away. I think a lot of people are talking about like a $5,000 to $10,000 loan on a $300,000 purchase or more, right? But now that there is even a tiny loan on it, it no longer qualifies as something that's reportable.
That's
or
not
is that
necessarily
accurate?
true.
That's right.
Yeah, there we go. Okay, so talk to us about that.
So banks have something called an AML, an anti-money laundering obligation. Okay, some of the small banks, some of the credit unions, one in particular, Farm Credit, you would think they don't have an AML. And so FinCEN says, hey, title companies, if you have identified this lender as having an AML, you don't have to report. But if this lender doesn't have one, It is reportable. So
cash.
Wow, there you go. And so at that point, it qualifies as a non-conventional or a non-conventional loan type, which is also something that's reportable. Is that accurate, or is it really kind of a separate?
I don't know if it's non-conventional.
Yeah, I don't think it's non-conventional. It's just if they don't have that number, we consider it cash.
Okay.
Yeah.
Along with gift funds,
Yeah.
hard money lenders,
Seller financing.
yeah, seller financing, anything like that.
Even seller financing. Wow. Okay. And that gets back to, well, the seller could be just as complicit as anybody else.
Correct.
And that's why they get pulled into the report. Okay. And these are two different reports that would be filed for each party.
Correct.
And the transaction, right?
Correct.
Okay. All right. Let's talk really quickly then, like on the other side of that. Why would anybody be trying to get around this? And why would people be looking for loopholes on this? Is it really going to be something that's that much different for everybody other than you guys who have to file the report?
The 111 data points for the buyer, depending on how your LLC, corporation, or trust are organized, they dig in. They want to know about beneficial owners.
Okay.
If they have more than 25% ownership, they have to be reported. That's never happened before. We have to know where your money's coming from. We have to know the bank. We have to know the account number. So, yes, it could be somebody, like you said, like a bad actor who is trying to skirt it because they know they don't want their name out there. But it could be just an individual that's like, no one needs to know this information, and I don't want to give it.
Got
So we have that a lot. I mean, think about payoffs and Social
they
Security
don't
numbers.
want to give information.
No,
Yeah.
they don't want to give us their Social Security number to get their payoff. And now we're going to be digging into their trust and their operational agreements and saying, oh, who do you work? Who's in this? And sometimes they bury an LLC in another LLC. And now we're digging into that second one.
So now, I guess what I'm hearing is that in order to participate in the real estate market at a cash level, right, you or as a business entity, you have to be willing to provide all of this extra information to the federal government. Are there other asset classes where you have to do the same thing?
I guess the only other thing would be the type of real estate.
Yeah.
So do we feel like when I'm investing in crypto, or if I'm investing in mutual funds or individual stocks, whatever, am I having to fill out some kind of a really long 116 points? Is that how many points?
111.
111 data points. I don't remember, as I do some of that, I don't remember having to provide 111 data points each time I transact. Yeah, not yet.
Not yet.
Not yet. It's really interesting that they're starting with real estate. How long has this been in the works? Is this something that we knew was coming, or did this just kind of pop on our radar here in the last 6 months?
ALTA, which is American Land Title Association, has been watching it for over a year.
Okay.
It's just, so what happened was the rule came out, and then it says it's going into effect December 1. But there's been a couple of lawsuits filed, and we don't know if that lawsuit or lawsuits will prevent it from going December 1. Or
Sounds
if it'll
familiar.
or it just gets delayed.
Okay.
Everybody I've spoken to at the ALTA level and down, they all believe it's happening. It's whether or not these lawsuits will change some of the criteria in which we have to collect and what has to be reported.
Got it.
So it may not happen December 1, but everybody's like, you better just plan for it. It may be next year, May 1. For us as title companies, we don't want to try to plan for something when the spring market hits.
No.
Yeah.
So we're trying to get everything lined up for if this happens December 1, then we're ready. If it gets moved, great. But at least we already have our processes in place, because there's a lot of processes that we have to put in place to get ready for this.
So I I don't want to get too far into this because I don't know how much we know about this at this point, but it occurs to me that real estate professionals probably ought to be on the lookout for potential financial crimes as well. And I don't know that that's really been on their radar. Like we talked about, it's so easy for things like this to just happen right under their nose, right? And they wouldn't have any idea. That said, it seems like there could be things that they probably should have caught or should have made sure were reported, and they need to make sure that they don't answer any questions about how to fill out this 111. 111.
Yeah.
111, you would think that would be really easy to remember, but 111 data points, we need to make sure that they don't answer any of those questions. Is there any additional liability concerns that we have for realtors surrounding FinCEN?
My concern for realtors, not necessarily a liability, but a loss of a contract. So Alta has provided some language to be placed in contracts.
Okay.
Because your listing agent prior would be like, ooh, I got a cash offer. These loan deals aren't as lovely as this cash offer. Well, now this cash offer could trigger FinCEN, and if your buyer doesn't want to fill out the paperwork or your seller doesn't, and they don't have this clause in their contract, they could cancel the contract, right? And so the idea is to get this extra language embedded in the contract so that there's extra teeth to keep people involved, and you can't just walk away from a contract because you don't want to fill out the FinCEN documents.
Understood. Yeah, so it's a little bit like making sure we've got the proper 1031 exchange language in so, to make sure somebody doesn't throw a fit about one piece of paper.
And I think it's important to point out, too, that if a contract does come to us and one of the parties refuses to fill out the paperwork, we're then obligated to report that as suspicious activity. So if they want to take it down the road to somebody else who may decide to close it because we can't, because they won't fill it out,
there's already a flag.
We've got it. We have to report it. We're obligated to report it, and they are investigating those reports when that happens.
Yes.
Got it. Got it.
So it's just, that's our moral compass. Let's do the right thing.
Yeah.
Fill it out. It sucks. I told everybody yesterday when I was doing a class, embrace the suck, right? It is what it is. We'll figure it out. We always do. Obviously, in the real estate market, things change a lot, and we all figure out how to work with it. It's just one more thing.
Absolutely. This is so interesting. It feels like, and I don't want to make it sound like I'm negative about it in any way. I think that it's important that these things are captured. It is really interesting to me that we're starting, though, with real estate, right, which is an extremely complicated asset class to convey.
Yes.
It's not nearly as liquid, but like I say, it seems like it's just an interesting place to start.
Yeah.
How did the title company end up being the enforcement arm of FinCEN on this?
They looked at who prepares the settlement statements, who has contact with the buyer and the seller, and said, oh, they have all the information. So the GTOs, when they started in 2016, that was kind of their dabble in the real estate. Like, is this going to work? How's this going to play out? And they were like, oh, this was quite beneficial and lucrative for the government if you figure, they're seizing assets and going after bad guys. So, yeah, they dabbled in it with the GTOs, and that's how real estate sort of became their number one.
Wow. All right. Well, so is there anything else that agents need to know? Is there anything else they need to be on the lookout for? What do we need to be thinking about here?
Well, I guess what is considered as residential. Because we may interpret it one way, the government may interpret it a totally different way.
So this doesn't apply to land. It only applies to residential.
Depends.
Okay, tell me about that.
So they define residential typically like 1 to 4 families. So we're all like, okay, great, we got that. Condos, great. Vacant or unimproved land.
Okay.
Usually it's considered commercial, but if we are told for like a builder situation that they're going to put a subdivision out there, it becomes residential, so it flips. Dual use properties is the one that's kind of the one that I feel crosses over into the commercial side, but they're considering it residential, and that would be retail on the bottom with condos on top. So there is conversation that the retail below, if when sold, may not be commercial. They might consider it residential because of the condos up above.
Okay.
So it's a little convoluted. And someone said to me yesterday, they were like, oh, so is that, how do we rationally think through this? And I go, we're talking about the government.
Yeah, right.
There's no rational thought here.
Yeah.
So that and how it's zoned is a big deal. We've never in title ever cared how something's necessarily zoned. And now we do, because let's say a buyer is paying cash, they're an LLC, and they're buying a commercial warehouse. Okay, great. We would just move on down the road, right? But then we find out when they talk to us or the realtor tells us, oh, they're going to convert those to condos. Triggers FinCEN.
Wow. And you have to make sure that it'd be so easy for that to just be like a conversational thing that just comes up and it becomes like
an issue.
Yeah, a huge issue for you guys.
Yeah. It's amazing what people tell us in closing.
Oh,
of course,
sure.
Yeah.
Holy moly.
Yeah. You guys are just sitting there doing your job and they're kind of nervous and excited and they just start talking.
Yeah.
Anything else that agents need to be aware of? Obviously.
The thing that sticks to me that might be important is, somebody wants an accommodation recording. So they buy individually and they're like, we want to transfer this to our LLC or to our trust. We can no longer be a party to that because there's no minimum on what the cash value is. So even if it is just a accommodation deed, no money transfers, the minimum doesn't exist. So then we would have to report it at that point.
I see. So if I purchase a investment property and then I want to transfer that to my LLC post closing, I got a loan, so it wasn't going to trigger FinCEN. But now I'm adding my LLC as a owner of the property. That's still something that then has to be reported. And with that, there isn't really any way around that either. People just need to be ready to do it, right? Or
well, if they bring it to us, I'll let you kind of.
Well, if they bring it to us, we have to weigh out the option, is it worth the 111 questions to file that accommodation deed? Or do we have them go take it to the county and file it on their own, and we're exempt from then that?
Does the county have to report that?
I'm glad you asked that question. There is an interpretation of the rule that's currently out there that, yes, they do. I don't think they're aware of that.
Interesting.
Yeah.
Is there a financial penalty to the county?
If they are considered in the cascade of the reporting, then they would be in the same boat we're in.
Wow.
And it would be if an attorney puts something into a trust, they have to report it.
Yeah.
Attorneys are not exempt, so that's kind of interesting. There is some exemptions to it. I would suggest that the realtors not try to figure out those exemptions, right?
Of course.
Like just
right.
Send it to the title company, tell us
done.
everything we need to know, and then we'll make that determination based on all of the criteria. But there are a few. One of them is estate planning.
Yeah.
Is exempt if that is transferred into a trust for estate planning purposes. But that's pretty much it. So we have closings where, we're sitting there the day before closing and the buyer calls and goes, hey, I talked to my accountant. They said I shouldn't buy this as an individual. I need to put it in as my LLC. Closing's going to not happen.
Be delayed for sure. Yeah.
We're going to have to delay it. And I was asked, how long do you think that delay will be? Well, I don't know. It depends on how fast your buyer and seller actually answer the questions and get it back to us. And then we make sure it's all there so that we can move forward. So it's just a lot of really good communication up front. I think is our biggest request.
Yeah.
Is just tell us everything up front. And then we can move through it quicker.
Yeah.
Because we're going to send out that questionnaire quickly. That intake form is going to go out as soon as we get that contract and we know.
Yeah. And I guess that's the other thing agents need to be aware of. It's been previously really easy to have the title company assist a buyer after closing and transferring it over to an LLC. It isn't going to be as simple.
No.
And you guys might have to increase your rate for it too.
Yeah, there's going to be a charge for this FinCEN reporting.
Yeah.
Yeah, I mean, they're estimating the first year for title companies, it's about $480 million for us to implement the process.
Oh my goodness.
It
So there's going to be an
costly.
additional charge. That's another thing that's important to understand. So if you are dealing with a cash buyer or if you are dealing with a entity as a buyer, and is the seller going to have to pay that additional charge as well? So it would only be on the buy side. So if FinCEN is triggered in a closing, there's going to be an additional charge.
Yeah.
And I don't want to say exactly what a price would be, but give a range. What would you expect a cash buyer to
Anywhere
have to
between
pay?
$250 and $500.
Okay, so anywhere between $250 and $500 for this additional report
Yep.
that you guys have to,
Yeah.
make sure is clean.
Yep.
I mean, those are some pretty significant changes.
Yeah, they are.
Yeah.
I when I first was reading about this, my first thought was, well, it sounds like this is everything that the title company has to do. How much of it really is going to impact us? But the reality is that when you all are impacted, our processes are impacted as well.
Right.
And what you said is so true. It comes down to communication, and we are the communication body, right?
Yep,
so making sure
absolutely.
that everybody's prepared for those things so that we don't have hiccups at the last minute is pretty important. So, guys, what else? What have we not covered today that's important for our listeners to hear about?
I don't know. I think we kind of covered it all.
I think we did.
Yeah.
Well, good. Well, let's see.
More to come.
There's more to come. That's right. And you're teaching a class, so tell us about the class really quickly. What all can they hear? How long is the class? Does it count for CE? And how many more times before the end of the year is it going to be offered?
That's all in the works. Working on getting dates and times and all of those things. But really, I think more than anything, for me, it's about not me as a title company individually, but as our industry as a whole working together to be on the same page and let the agents know you can't bring something to me that I say no, and then you can't take it to Elizabeth because she's going to say no too. Yeah. And get the information out there to people so everybody knows what we're expecting and what we're working with, and that we're all doing it the same way.
Okay.
Yeah.
Absolutely. Well, guys, I really appreciate you taking the time to talk to our
thank
listeners
you.
about this, and it was so nice to meet you. And have a great rest of your day.
Thanks so much.